Welcome to the live economic and financial markets commentary. This live session will cover fundamental analysis in the week ahead, global coverage of current economic data, including major markets news, analysis, and events, how to apply the best trading strategies prior to news being released and after. First, I'd like to start the session by giving you some information about me. My name is Ehab Jubil. I was born and raised in Egypt. I have a passion for financial trading as well as teaching. I have been trading for a number of years, mainly on Forex and commodities. And in recent years, I have also set up my own trading robot signals and website. I host online webinars and seminars on investment and financial trading regularly, and I provide my service to subscribers worldwide. Now let's start the session. The main event next week is the US job report. We expect job growth slowly to 180,000 in September. Job growth will need to drop below 160,000 before the Federal will see it as a barrier to start the tightening cycle later this year. China still attracts much attention. We expect the official PMI to decline slightly to 49.5 in September from 49.7 in August. We expect service PMI dropped to 51 in September from 51.5 in August, as the weakness in the industrial sector should have some spillover to services as well. In the euro area, the focus is on inflation in September, which the markets will follow closely as the pressure on Draghi for further easing intensifies. We expect inflation turn negative again. In the UK, we must see strong growth in the index of services through quarter 3 in order to have above trend GDP growth, as production and construction quarter 3 figures released so far have been weaker than expected. The emerging markets have become the weak link in the global economy and represents the biggest risk factor currently. We look for Chinese growth to stay around 6.5 to 7% in the coming years, while there is likely to be little relief for commodity exporting emerging markets economies. The US economy continues with a moderate recovery, and the Federal is expected to start raising rates in December, also very slowly. While the euro recovery faces some downside risk in the short term from the emerging markets turmoil, but we expect the recovery to continue in the medium term. This week we will watch these events in London time. Wednesday 30 at 1:15 p.m. US ADP non-farm payroll employment. 1:30 p.m. Canada GDP monthly release. Thursday 1st of October 9:30 UK manufacturing PMI. At 3 p.m. US ISM Manufacturing PMI. Friday, 2nd of October at 2:30 a.m. Australian retail sales. At 1:30 p.m. US non-farm payroll. I will talk in more details about this news. US ADP non-farm employment change will be released on September 30 at 1:15 p.m. London time. This news is usually a good indicator for Friday's non-farm payroll release, but with this month's non-farm payroll falling on the 2nd of October, this is probably the only reliable indicator ahead of the report. So we should see more attention paid and more volatility if there is a surprise. It's forecasted at 191,000, previously 190,000. How to trade this news? If the deviation of 50,000 is hit, the market probably will not have a problem pushing it, and this will change market perception for the non-farm payroll release on Friday. Therefore, it's best to be around your computer during the release time rather than find out what happened hours later and potentially miss the entire movement. We will be looking for a deviation of 50,000. So if we get 240,000 or better release, I would be looking to buy the dollar against the weakest currency. And if we get 140,000 or worse, then I would be looking to sell the US dollar against the strongest currency. In the event that we do get our deviation, we will be looking for an after news retracement trade, and we will do the three waits: wait for the deviation, and then wait for the market to move with momentum first, and wait for a decent retracement before entering the market and buying the option or placing your trade. And that's what we will usually trade the news with. Wait for the deviation and wait for the market to move with momentum first, and wait for a decent retracement before entering the market and buying the option or placing your trade. If we don't give the deviation number, I expect the market to follow the pre-release market condition and sentiment. So we should see the trend of the market, and if we don't get our deviation number, we will just follow the trend or the pre-release market condition. You can see 15-minute chart of euro dollar last release, September release, during and after the news release. It was very simple and easy trade. We did not get our deviation number, so we just followed the trend. We could make fall or down option with expiry of 6 hours. So we will wait to see if we get our deviation number. Like in this example, like last release, we did not get our deviation number, and the trend was downwards, so we could make a profitable trade. The second news we will watch this week is Canadian GDP monthly release that will be released on September 30 at 1:30 p.m. London time. Canadian GDP is expected to come in at 0.2%, and considering current market trend of crude prices, I will not go long on the Canadian dollar for long or short term because of crude oil prices. It's forecasted at 0.2%, previously 0.5%. How to trade this release? We will look to sell Canadian dollar if we get a minus 0.1% or worse release, or we will buy Canadian dollar on 0.5% or better release. With recent weakness seen in Canadian dollar, a strong fundamental such as this news, Canadian gross domestic product (GDP) figure, may be the catalyst we need to see more volatility in Canadian dollar. We will also use the retracement trading method to trade this news. Wait for deviation first, then wait for the market to move with momentum, and wait for decent retracement before entering the market and buying the option or placing your trade. And the same in all news, if we don't get the deviation number, I expect the market to follow the pre-release trend. You can see 1 minute chart for the last release, September release, during and after the news release. We got the deviation number, and the actual release, 0.5%, was better than expected, 0.2%. So we could make down or fall trade after the retracement that you can see at the chart. So we get our deviation number, and we will make the 3 weights, and after the retracement we will place our trade downwards. UK manufacturing PMI will be released on October 1st at 9 AM London time. This news should provide the catalyst needed to move the market, especially considering how much the pound has corrected since the last rate meeting. If we get a stronger release, we should see plenty of support back on the sterling. They expect UK manufacturing PMI at 51.3, previously 51.5. So then how to trade this news? We will be looking for a tradable deviation, and the deviation is the difference between the forecast figures and the actual release figure of 2. So the deviation number is 2. Since this is a leading indicator and its impact may hint the future trend of other economic indicators such as inventory, employment, or retail sales, the market usually reacts to this release with volatility if we get our deviation number. We will be looking to buy the pound if we get 53.3 or better, or looking to sell the pound if we get 49.3 or worse. We will use the retracement trading method to trade also this news release. As usual, if we don't get the deviation number, I expect the market to follow the pre-release market condition and sentiment. And this is the 15-minute chart of pound dollar for the last release, during and after the news release. Because the deviation number was not hit, we did not see any new direction of the market, and the market just followed the pre-release market trend downwards, as you can see. So we could wait after the release, no deviation, so we can place a trade, or we could place a trade downwards with expiry between 4 and 6 hours. Australian retail sales will be released on October 2nd of October at 2:30 a.m. London time. Australian retail sales release is usually a highly tradable report out of Australia with plenty of traders watching it. Remember, it's forecasted at 0.4%, previously minus 0.1%. Our trade plan is we will log the deviation that we are looking for. The Australian retail sales monthly release is for a minimum of 0.5%. So the deviation is 0.5%. If we get a 0.9% or better, we will look to buy. And if we get minus 0.1% or worse, we would look to sell. So 0.9% or better to buy, and minus 0.1% or worse to sell the Australian dollar. There is a high probability of market movement of over 50 pips in the next 2 hours if we get our deviation number. We will be looking for an after news retracement trade also for this release. And if we don't get the deviation number, expect the market to follow the pre-release market trend. You can see 15-minute chart for September release during and after the news. We got in last release, we got our deviation number, 0.5%, and there was a chance for a good trade after the market retracement. Would be for shortfall or down trade with expiry of 4 to 6 hours. You can see we should wait till this retracement and we place a down trade. Last news we have today: U.S. non-farm payroll employment that will be released on 2nd of October at 1:30 p.m. London time. It's expected to be around 202,000, and with the federal still on the fence as to when to raise interest rate, if we were to get a strong surprise in either direction, we will see plenty of market reaction. U.S. non-farm employment is forecasted at 202,000, previously 173,000. And the unemployment rate forecasted at 5.1%, previously the same 5.1%. How to trade this news? Non-farm employment change release is forecasted at 202%, as we know. So the employment rate also is expected to be at 5.1%. So if we get a significant lower release on the non-farm payroll, significant lower release on the non-farm payroll number, that means 132,000 or worse, 1,302,000 or worse, and slightly higher unemployment rate, 5.1% or more, I would be looking to sell the dollar against stronger currencies because speculation for federals to potentially delay the timing for the first rate hike. So I will buy the dollar at 272,000 or more. On the other hand, if we get a strong non-farm payroll, 2072 or better, and the unemployment rate falls or remain at 5.1%, dollar could strengthen, and I would buy dollar against other weaker currencies. So buy dollar at 272,000 and sell at 132,000. If we get a conflicting release, then wait and see how the market reacts first. If there is an overwhelming sentiment driving the market, we will get plenty of opportunities for an entry if we just wait for 5 minutes after the release. You will get a much clearer view. If we don't get the deviation number, the same, expect the market to follow the pre-release trend. This is the 1 hour chart for September release during and after the news release. Dollar yen chart, 1 hour chart. Because the deviation number was not hit, it was expected at 215 and the actual release was 173,000. We did not see any new direction of the market, and the market just followed the pre-release market trend downwards. So we can watch the market after the release and after the first retracement. We can enter the market and make down option, is down option or down trade. So then I would like to thank you for attending today's webinar. We will hold following webinar next Monday. Goodbye and see you next time.